So number 7 is we're looking in the rear vision mirror and having a look at what history can tell us. And history tells us, whilst it's no guarantee, history tells us it's unlikely to occur, and for a couple of reasons. They will use the instrument that we're talking about now to raise rates. They will also use that if needed on the flip side, but also the property market is protected at the ballot box. Imagine trying to win over as the government of the day when your biggest asset that most people have crashed. So therefore, it's too big to fail. Anything in history has happened. Obviously, the GFC saw coming off of values, but it didn't crash. So look back in history to see if there's any precedent that would suggest that this move will actually be on its own as a standout to cause a crash, because there is no precedent that you can go to, Ben, in recent history to suggest that is likely to happen.
The data shows a lot in that, Bryce. And I think the other important point around wealth effect, we've talked about that as another human behavior. When people feel wealthier, if we still have confidence about what the future looks like here post-pandemic and we keep that momentum moving, then the wealth effect obviously turns into consumption. Now, turning interest rates higher naturally means we actually want to turn some of that consumption down to ensure that we don't have demand-led inflation internally, as opposed to the imported inflation that we're currently seeing from offshore. So when we start to think about that, it gives us some context that the Reserve Governor, by bringing the rates up to a more normal setting, is hoping to just cool the economy a little bit so we can then ease the level of inflation that we currently have. Because that is true. If we have sustained inflation over a longer period of time, that is more of a risk, because that will then start to show up in regards to unemployment. And then we've got ourselves a bit of a difficult story. But we've already know that, with 2% of GDP coming from consumer consumption in this country, it's something that we've got to continue to keep, that fine balancing act going with the RBA, and they'll have no problems at all. Dr. Philip Lowe says if we shoot the mark, we can always, potentially bring it back to find that right balance where we've got full employment, but we've also got inflation in check. But I also, Bryce, wanted to just put some data in behind this story as well, right? So we know through the median data in measuring Australian property value. So again, very blunt, big picture story here, but there's been 5 recessions dating back through the 1970s, and they're severe recessions. The next 5 years after those recessions, we saw that the average price increase was 33%. We had a very, very quick 2-quarter negative recession during COVID. And so that was obviously something that is a technical recession. And this is why I want to just stress on this one as a finishing point on our thesis is, if you go and have a look at the cash rate chart on the RBA page, you'll see between 2002 and 2008 that we had a long lifting cycle. So that lifting cycle went basically 6 years. Now, over that time, the cash rate was 4.25% at the starting point, not 0.35 that we've currently got today. And it moved from 4.25 right through to 7.25, right, over that period. Now, what happened to property prices over that cycle, Bryce? Did they go down?
They plummeted. They crashed, didn't they? They went through the floor.
Yeah, I'm not sure that came up in my news feed. Yeah. No, they grew by 50% over that period. Now, that's again the Australian property prices. So people were locking in fixed rates in their 7s. And I'm sort of saying, well, I wouldn't necessarily be doing that. And that, absolutely wanted peace of mind. And I wouldn't be going too long. But that's unfortunately, some people did lock in. Same at the moment in terms of people locking in. They're locking in a premium right now. And so I'm not sure that's the way in which I would go. People just, so that initial deterioration in confidence starts to come back down when everyone goes, you know what, the sun does keep coming up every morning. I do keep going to work. I do see the economy moving okay. I do see people spending all of those savings that they've got, in their buffer accounts. And so I think from that point of view, where's this crash coming? Where's this cliff going to happen? There's no concentration there to have evidence of that severe price reduction anytime soon.